Good morning, good afternoon, good day. Welcome to my midweek market meetup, 25th August 2021. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use these Q systems in my trading. They run on the underlying TradeStation and Metastock platforms. That was the last slide of the presentation. Let's continue with the live system. Starting with a look at the global markets, starting with Australian index, all ordinaries, AORD. One week ago, AORD displayed a bearish headwind. Backdrop color was bearish, and this week the same is true. However, there is a trendline support nearby. That's why we are not going to try to short the Australian market now. In the daily, it has multiple trendline supports, no trendline resistance. It is in an uptrend. Today's flow color is bullish. It has higher high, higher low. However, the backdrop color being bearish in weekly, we don't have a go with flow trend following long setup. If you are holding long positions in the Australian market, you may continue to hold them subject to the individual stocks trailing stop. Next, Japan Topix Index. Topix was moving sideways, and that is true. Even today, it is bound by trendline resistance and watermark resistance at the top and watermark support at the bottom. It's inside a box. It's in the middle of the box. That's not a point to take either long or short trade. China's CSI 300 index. CSI 300 is now once again moving inside a range bound by this dynamically automatically drawn trendline resistance and support. We may not take any directional trade unless the direction is clearer, which will happen once it can break out of the sideways range. UK's FTSE index, it was and is continuing in a sideways range. The upper edge is bound by watermark resistance, lower edge bound by trendline support and also watermark support. And lastly, India's Nifty 50 index, that is in an uptrend. That was a look at the global markets. Two of the global markets, Australia and Australia and India, they are in an uptrend, and the rest are moving in a sideways range now. What about the USA market? Let's look at the market ETFs. S&P 500 ETF SPY in an uptrend in weekly, made a new all-time high yesterday. that is this candle. So it made a new all-time high, however closed with a doji candle and with an indecision at the top signal. It is too close to the upper boundary to take any new long trade, but it is in a confirmed uptrend. QQQ also made a new all-time high yesterday. That is this candle. This last dot, the small dash that is coming, that is today's pre-market price. This is yesterday's price, made a new all-time high yesterday in clear uptrend. Dia also in an uptrend, has trend line support, no trend line resistance. Yesterday closed with an indecision shape candle. And IWM, it was the weakest of the market ETFs, continuing to move inside a range. In the middle of the range, we'll avoid taking any swing trades here. The USA market overall is in an uptrend except for IWM, that means except for small cap stocks. Let's look at the market internals if we can find something from there. Market breadth, Nasdaq and NYSE. This is looking at the internals. First, a look at the percentage of stocks above 50 MA. That improved for both Nasdaq and NYSE, but it is still in a downtrend, still below the average line. That is showing the underlying weakness, which is not at all visible from the QQQ and SPY making new all-time highs. If we look at the weekly picture, we can see the same bearish divergence between the yellow lines, the percentage of stocks above 50 MA, and the price. Price is steadily going up, but the yellow lines are coming down, showing bearish divergence in the weekly interval. That bearish divergence earlier was also visible for advanced decline and up down volume, but that divergence seems to have played out, and I mentioned that in the previous webinar as well. The divergence having played out shows that some of the underlying weaknesses, they have been erased, but still the yellow lines clearly show that many stocks are still below 50-day moving average. Now let's look at the market breadth total view. Interestingly, on Monday there was an eureka, that is heavy buying. Heavy buying when the market is making new all-time high may be a cause for concern. And this heavy buying eureka came because of Nasdaq, not because of NYSE. Nasdaq was underperforming NYSE for a while, and on Monday, at least on Monday, Nasdaq outperformed, and the eureka came because of Nasdaq. For the market breadth total view, that is calculated based on the two composites and four major indices, the overall picture also shows underlying weakness. The yellow line, percentage of stocks above 50 MA, it is still coming down. Though in the overall picture, we see that it could go above the average line. That is not enough to change the trend. We'll have to see if it can make higher high, higher low. For now, we have to say that the yellow line is showing underlying weakness, but last couple of days was very strong for the market. Broad market was strong. Not only certain industries or sectors, but across sectors and across industries, you could see the strength. We'll have a look at that using QH, but let's look at what kind of stocks are in favor now, growth versus value. Earlier, it was outperforming, growth was outperforming value. Then it started to roll over. Now also you may say that it is not as strong as it was before. So growth improved over last couple of days, but still it is either equal performing or maybe slightly underperforming value. And between small cap versus large cap, small cap was underperforming. The cyan line was coming down, so small cap was underperforming. Last couple of days, small caps did better, but overall it is still showing the underperformance. In this market drift total view, I am looking for signs of sharp decline that comes with large distribution count or with Hindenburg signal, but none of them are present. Therefore, I am continuing with my view, that is that same view that I am sharing in many webinars, that I am not expecting market to drop sharply and suddenly, because there is no large distribution count and also there is no Hindenburg. I mentioned that there was broad market recovery last couple of days. We can find that out from QH. Sector, industry, stock advance decline. The 1 day, 2 day and 5 day periods are now bullish. 10 day period still continuing to be bearish. 1 month period is bullish. What has changed since my last webinar, that was during the weekend? During the weekend webinar, we saw 1 and 2 day periods were already bullish, but 5 and 10 days were bearish. Now 5 day period has also turned bullish. 1 month was already bullish in the weekend webinar, and that is continuing. We'll see if the strength continues and changes the 10 day period also to bullish, or does it flip back to red starting with 1 and 2 day intervals. Whatever happens, we will find that out in real time from QH. If we look at the bucket analysis, yesterday the percentage of stocks above mid bucket, that is above the mid Bollinger Band, went up by about 9%. So now 59% of stocks of S&P 1500 are above their mid Bollinger Band. In the weekend webinar, it was below 50%, I think around 40 something percentage. So during the weekend webinar, overall the market from bucket analysis was bearish, but now that has turned to a bullish posture. The distribution of stocks across these 12 buckets, they are showing a very nice normal distribution kind of pattern. There is no large percentage of stocks in the upper extreme bucket above Bollinger Band, above upper Bollinger Band, neither is there a large number of stocks below lower Bollinger Band. So it is not at the extremes, neither at the upper end or at the lower end. Many stocks seem to be near the middle of the Bollinger Bands. We'll see if it reverses down from here to continue the downtrend of many stocks. Remember earlier, a couple of days ago, many stocks were in the lower half of the bucket analysis, and now they have come to the middle of the bucket analysis, as if they recovered from the lower half of the Bollinger Band to somewhere in the middle of the Bollinger Band. So if they tilt down again, then the downtrend in those stocks will continue. On the other hand, if the histograms tilt further to the right, then we'll know that they are recovering even more. Right now there is no trading decision that we can make from the bucket analysis, except that overall now it has turned bullish. During the weekend webinar we saw that overall it was bearish. How are the large caps doing? Let's look at the mega cap top 20 custom index. After displaying the bearish headwind, price came down, came to the yellow direction line and also to the trend line support, and now it recovered a bit. Even if it comes down, we have trend line support nearby, therefore we are not going to try to short the mega cap top 20 right now. Mega caps are not near their previous all-time high, so overall you can see also from the relative performance line they are underperforming the market from, let's say, this period from end of July. However, earlier, if you see especially from, let's say, beginning of 2021, overall they were outperforming the market and now they are underperforming. We'll see how it goes going forward. It seems the mega caps and large caps have a large influence to hold the market up. We'll see if that continues going forward. Now let's look at the technical breadth, the balance between bullish and bearish technical signals. First, using the weekly interval, all signals 86% bullish, strength signals 96% bullish, trend continuation 86% bullish, and reversal signals 78% bullish. This is a very bullish picture. In terms of bearish headwind, the weekly interval has a number of bearish headwinds but not large enough to be at the alert level. The weekly finder picture is clearly bullish, and if we look at yesterday's finder picture, that is also bullish. This is the daily interval finder technical breadth. 82% of all signals bullish, strength signals 88%, trend continuation 85% bullish, and reversal signals are mixed. Overall, we have to say this is a bullish picture in terms of finder, both in the weekly as well as the daily interval. Therefore, the market is looking bullish. Only one may be careful not to buy stocks that are already overbought technically or overvalued fundamentally. And using Q systems, we can find that out. Let's look at some of the stocks I shared in the previous webinar. I think the weekend webinar, that would be based on Friday's signal. Let's look at a post that I shared at that time. On my website sagarnandy.com, I regularly share live stock analysis before knowing the result under this category, Q360 degrees trading techniques and ideas. Let's look at one analysis I shared recently. That was 7 days ago on August 18. I shared a number of stocks: Vodafone, Trip.com, BLDP, Coca-Cola and AMD, I shared their live snapshots and suggested that you may look for Q360-degree trace from there. Which one was the strongest of these stocks? Let's find it out. Let's first look at the industry rotation. I shared the industry rotation scorecard for the industries of these stocks. Which one is the strongest here? Using real-time column, we can see that was hotels, resort, and cruise lines. We could look at the number, but I just look at the color. Cyan color is bullish, magenta is bearish. So hotel, resorts, and cruise lines as an industry, it was the strongest. We could buy in that industry. Also, the pace column was showing that it was not only strong, it was accelerating. And the next strongest industry was wireless communication services. Again, the industry was strong and it was showing acceleration. So we could consider buying in both these industries. That is the Q guideline, Q way of trading, trying to align the industry strength, fundamental strength, as well as technical strength while buying. Now, could we short any of the stocks? No. If you see the soft drinks, electrical components, equipment, and semiconductor industries, the lower three industries, they are not as strong as the upper two industries. However, they are still improving compared to the previous day. So these industries were not the strongest relatively speaking, but they were also improving. So the 1 day score was lower than the real-time score, and you could just look at the color coding also. So the industries for the lower three items, they were not weak. So even if we found technical setups for shorting, we might not want to short the stocks because industry would not be aligned. So two stocks that we could consider buying based on industry analysis, only buying, there is no shorting opportunity, and those would be in the top two industries, hotel, resorts, and cruise lines being the first choice, and wireless telecommunication services being the second choice. That is how we use the industry rotation information in real time to decide not only what to do, that is to buy in these top two industries, also what not to do, not try to short in the other three industries because the industries were improving. Now, if we wanted to buy in the top two industries shown there, I shared some stocks in those industries. In the hotel resorts industry, I shared TCOM, Trip.com, and in the wireless communications, I shared Vodafone. How are their fundamentals? If we look at TCOM, valuation is in the middle, but it has high earnings growth. In the last quarter, that is, it is a 1-star buy candidate. In Q Technique, we are allowed to buy either based on valuation or on earnings growth, or both. In this case, we have high earnings growth, so that makes it a 3-star buying candidate. What about Vodafone? Vodafone is undervalued and also has earnings growth. It seems there is no quarterly data, only yearly data. Yearly data shows high earnings growth, more than 25%. So Vodafone is a 3-star buying candidate in terms of fundamentals. So we found two industries, hotel resorts, strong, wireless telecom industry also strong, and then we could find two strong fundamental stocks to buy in them, TCOM and Vodafone. Did they give any technical setup? I shared it in the same post. Vodafone, in real time we could find it gave a breakout setup and also a trend following go with flow long setup. Total number setup number of setups were 2 for Vodafone, and for T-Com we had a bullish headwind, a unique signal and setup in Q systems, bullish headwind, reversal setup. So Vodafone was trend following and breakout, and T-Com gave a reversal setup. And Q traders are comfortable taking both reversal as well as trend following and breakout setups. That is what I shared on this day 7 days ago around 2 p.m. August 18. Let's see how they played out after that. This is Vodafone, and I shared the idea on this day 18th August. As you can see, 18th August, that day closed with a bearish shape candle. I shared the analysis at 2 p.m. But by the close of the market, it closed with a bearish shape candle. Therefore, if you didn't enter the trade using real-time chart in the morning session, you wouldn't buy the stock at the close of the day. But if you had entered the trade already based on real-time fine-tuned chart, most likely in the morning session, you would continue to hold it as a swing trade, and by yesterday's close, you would have a very small profit. If you look at the weekly daily, the weekly found support in the memory trend line support, and now it is continuing to go up. Backdrop color has turned bullish. Daily is continuing to go up along this trend line support. Yesterday's traffic light color is bullish. So we would continue to hold the trend. And if you noticed when I shared the analysis, let's go back to the fundamental scorecard. If you look at Vodafone and check the dividend yield, it was having a 6.4% dividend yield. If you thought that the market is at a very high level and you wanted to move some of the cash to defensive stocks, then you could consider buying Vodafone because of its dividend. In that case, you might not want to put a stop loss using recent swing low, because if you're looking for dividend, it would be a longer term holding. So Vodafone could be bought not only as a strong fundamental swing trade stock, but it could also be bought as a dividend play. That was Vodafone. If you bought it, it is still in the trade, didn't hit the profit target, didn't hit the stop loss. Next is T-Com. This is the bullish headwind. The unique signal in Q systems that tells that a reversal may be imminent, and if along with the signal other checklist conditions are met, then we have a proper trade setup. And this bullish headwind long trade setup we could find in real time from Q Sonar, both on TradeStation as I showed in the snapshot, and it could be found from Q Global on Metastock as well. And see, after we entered the trade on this day, price has sharply gone up. I in fact had a long trade in T-Com. I entered it on the same day using the bullish headwind reversal setup, and yesterday it covered much more than the risk distance. I had booked at least partial profit to make sure that the trade is an entirely risk-free trade by now. This is a great example of a headwind trade, long headwind trade in real life. Those two trades I shared on my forum ideas, and in the weekend market roundup I analyzed multiple stocks using live market and I looked at these two stocks. One was CMO. Weekend analysis was based on this day, Friday's close, and after that, both Monday and Tuesday, the stock CMO has sharply gone up. And the other stock I shared in the weekend roundup, also in the long direction, was NMRK. That was based on the close of this candle, Friday's candle, and after that it has gone up, but not much. Now I see the daily has an indecision at the top signal yesterday. The weekly so far is having an indecision shape. However, if we entered the trade, we would have sized the trade so that we are comfortable holding it either through the initial profit target or through the stop loss. So we will continue to follow our trading plan. So far the trade is in play. Now also if we go back to Newmark's fundamentals, NMRK, the stock's fundamentals, let's carry out a peer analysis and fundamental analysis using QVital. NMRK is in the real estate sector, that is a defensive sector, and both other stock, the other stock CMO and NMRK, I selected based on their fundamentals. These are crown jewels, great valuation, fantastic earnings growth, high revenue growth, and also a short squeeze potential. Funds are accumulating. So everything that I would like to have in a stock in terms of fundamentals, that is fund accumulation, crown jewel, short squeeze, everything was present in Newmark, NMRK. That was a reason to choose the stock. And you can see yesterday 85% of peer stocks went up, so the industry continued to be strong yesterday. And CMO, the other stock that I discussed in the previous weekend market roundup, valuation was in the middle, earnings growth was negative, so fundamentally it was not so strong, but it had a high dividend yield, 8.7%. So one could consider buying CMO as a dividend play. It's a mortgage rate, so that may also be considered as a defensive industry. Yesterday, 84% of peer stocks went up, so yesterday the industry was very strong. Funds are accumulating. So the last 4 buying candidates that I shared, either on the forum or on my weekend webinar, they are all working out all right. Overall, the trades made profit. Now let's look at it stock that I shared yesterday on the forum. And I sometimes like to look back on the actual post so that we review exactly how it looked like when I shared it before knowing the result. 19 hours ago, so it was yesterday, August 24, around 1:48, so let's say around 1:50 p.m. Eastern Standard Time, I shared, though its COVID-19 vaccine got full FDA approval, I wouldn't buy the stock today. And that was Pfizer, PFE. And that comment was based on the Q360 degrees analysis. Pfizer's industry, pharmaceuticals, rapidly deteriorated yesterday in relative score, and it also decelerated. So the industry was telling not to buy any pharma stock yesterday. Then I looked at Pfizer's fundamentals. Fundamentals are not very weak. in the middle, you may say, or maybe you can say it's actually one star, has high earnings growth, not super high, but high earnings growth in the last quarter. Valuation is in the middle, so it is a one star buying candidate. However, yesterday, though SPY QQQ made new all-time highs, we saw the industry was relatively weak and the stock itself came down as of the time I shared the post by 3.12%. 49% of industry peers were down. So the fundamentals were okay. Fundamentals would not stop us from buying, but the industry was telling us to be cautious, and the stock itself was down by more than 3%. And then I looked at the technicals. 1 week ago, it displayed an indecision at the top, and as of yesterday, the weekly candle displayed a bearish headwind. Remember, just a while ago, I shared a trade in which stock? In one of the stocks, trip.com, Tcom, where you could buy at a very low price using the bullish headwind reversal signal at a very, very low price. And the same headwind signal can also come near the very top, as happened in Pfizer. In the weekly, it displayed the bearish headwind, and also in the daily, it displayed the bearish headwind. Right on the day, it made a new all-time high intraday basis. That's how useful and powerful these headwind signals are. That was at the very market top. If you miss taking the bearish headwind, then you may take the subsequent bearish flow candle. Yesterday we have bearish traffic light, but flow didn't turn magenta. I was waiting for that, it didn't turn magenta. So it was not giving a short setup, but it had enough signals to be cautious. That's why I didn't say that it's a shortable candidate, but I said this is a stock I wouldn't buy as of yesterday. This is exactly the chart that I shared. On a day the market made new all-time high, at least SPY QQQ. This stock came down with bearish pressure and at pendulum high. Let's see how Pfizer closed. Pfizer closed right near the low of the day. So it could not recover, that is showing a bearish picture. So at the close of the day also, my analysis was valid that I was not going to buy Pfizer. What kind of stocks to buy? There seems to be many stocks to buy using Q guidelines, which are strong fundamental stocks in strong industries and giving low risk buy point. And some of the Chinese stocks are doing that. Let's look at this stock WB Weibo. This may be giving a buy setup as of yesterday. Let me check if that is true. But let's look at the fundamentals first. Weibo WB Interactive Media and Services. I think it's a Chinese stock. Great valuation, fantastic earnings growth, high revenue growth, short squeeze potential. So it is a crown jewel plus more because it has short squeeze potential. This is a very strong fundamental stock. Yesterday, 84% of peer stocks, the 43 peer stocks went up. So the industry was in itself very strong. Was it relatively strong? Let's find out from QH. The industry score came and price went up with high bullish pressure and it reversed from the watermark support. So at the close of this day, you could take a box long trade setup using the daily interval, but you might not also take it because the trend line resistance would be close by relative to the stop loss. So when I completed the analysis, I see that I would prefer to buy near the swing low, but I didn't have a proper trade setup using the daily interval. Yesterday it broke out, but it is not very comfortable for me to buy because the stop loss might be near the swing low. Now yesterday also had a gap up open. So sometimes if a breakout happens with a gap up, one way is to put the stop just below the gap up, that is yesterday candle's low. That could be done. The weekly has great support, so you might consider that. Somehow I'm not feeling very comfortable buying it because it is far away from the swing low. I would rather it pull back little bit and go up again and try to take it as a go with flow long trade setup. Now Weibo is not giving a trade setup yesterday, but let's see if there are other similar strong fundamental stocks, the 3-star candidates or crown jewels. To do that, let's look at the liquid stocks list, mid and high price stocks. I'm excluding the low price stocks, which tend to be more speculative. Retrieving data about these 2168 stocks and calculating Q fundamental scorecard. No data is stored on my computer. Let's give it a few seconds. Done. Scorecard is updated. Let's look at the stocks list and look at the crown jewels. Many of the stocks went up by large percentages. Let's look at the stocks that went up by at least 3% and look up their trade setups or signals from QFinder using the smart action button. Let's do that. We have all the stocks here, and in this soon to be released version of QFinder, as usual, you can see the list of stocks, whether they are at price extreme, high, medium or low. You can see the list of signals and setups, percentage change, Reuters symbol, and then you can see the total number of Q signals for today and also the number of trade setups. When I came here, by default it is sorted by percentage, but let's sort by the number of trade setups. In a recent webinar, I explained how we can do that in Q Elite using the new Q setup sonar, and with these few modifications, it's even easier to do that in Q Finder also. So I'm going to click this button. Okay, it refreshed all the stocks. Let me go back to Vital, look up only these stock signals and just double click here to sort by the number of setups, and it seems all of them have only one trade setup. Some are breakout setups, some go with flow setups, one box setup. Let's look at them one by one. Let's look at the stocks with breakout setup. This. Open them using Q Global. Let's go through them one by one. EAT broke out of trendline resistance but closed with an upper tail, and there is another trendline resistance, so I'm not going to buy it now. Close this. Next one, PUMP, pump. This is looking better. Yesterday it broke above this trend line resistance with bullish pressure, and it has a trend line support that is coming from far away. So I'm going to look at it using weekly daily. Let me keep this stock PUMP. Next, WB. We already looked at WB. It is giving a nice breakout, but we already analyzed it. Let's close this. Next is TROX, TROX. This is also giving a nice breakout from this trend line resistance. In fact, broke out of a triangle pattern, regained the yellow direction line. White direction line is already below price. Trend line breakout, triangle breakout with bullish pressure for 2 successive days. Let's keep this. I'm going to look at it using weekly daily. Next, IGT broke out of one trend line resistance, but several other trend line resistances are nearby. Not going to buy now. Close it. This is looking nice also. ANF, Abercrombie and Fitch, broke out of two trend line resistance. That's even better, with a bullish pressure. So I'm going to look at it using weekly daily. This is also a stock, again broke out of triangle pattern, and once again the bullish headwind came near the very low. Okay, I'm going to look at it using weekly daily. Let's skip it. Back to pump. Now pumps breakout yesterday, though it is with bullish. Okay, let's look at it using the 3 chart template. I'll explain something how I would have or wouldn't have bought it yesterday. Now when I look at it weekly, I have more reason to buy, because as I mentioned, this pattern, weekly trend line support, daily trend line resistance breakout, is a very strong, very powerful pattern. And unlike WB, here the recent low is not so far away. Only reason I wouldn't buy it at yesterday's close is that it closed above the trend line resistance, but not by a decisive margin. So I might watch it today. That was pump, and let's look at the other stocks. TROX. Here the breakout is very clear breakout. Let's open it with weekly daily template. Very nice. Daily has a beautiful, sorry, weekly has a beautiful swing low. After this long downtrend, this is the first week, the backdrop color turned bullish with a bullish shape. Weekly has trend line support, daily breaking out of trend line resistance, breaking out of triangle pattern, powerful pattern. 2 successive days of bullish pressure, was inside a Q squeeze earlier, was inside a traditional squeeze also. For 2 successive days, it went up by biggest move in a month. Yesterday we have a kahuna. So we have enough buy signals in TROX. We'll look at its industry later. Let's look at the last remaining stock, ANF, using the weekly daily interval. This is also nice. Same pattern, weekly trend line support, breaking out of daily trend line resistance with bullish pressure. In the momentum signals, again we have a kahuna. So we have enough buy signals both for ANF and TROX. So now the last step is to check their industry strength. This ANF, this is TROX. I could control click to select both of them and use these buttons to check up their industry graph or directly go to industry rotation. This industry graph, industry rotation. Because we have only two stocks, let's go to the industry graph first. I like to look at the graph first. Apparel retail, that's very strong and holding on to the strength. We have 147 industry groups for 1 day, 2 day, 5 day periods. The apparel retail, that is ANF's industry, is very strong. And for trucks, also it is strong and improving. Strong for 1 day, 2 day periods, improving relative to 5 day periods. So the graphs are telling me that it is okay to buy, but let's look at the rotation. Yes, it is okay to buy. Of course, apparel retail is stronger and it had been strong for a while. That is a reason to buy. And commodity chemical can also be bought because it may be a turnaround candidate. So industry allows buying in both of these stocks. Let's look at them again. Industry allows buying, great fundamentals and technicals are allowing breakout setups in these two stocks, TROX. Now looking at them using Q Elite on Trade Station, great breakout from daily, great support in weekly, bullish pressure, and the other one ANF. I mentioned it several times earlier during webinars that this is a very powerful pattern. When longer term weekly interval has support from the memory trend line, daily is breaking out of trend line resistance. Those are very powerful breakout setups. So we found at least two buying opportunities that are not at extreme high price level, and fundamentally they are actually undervalued with very high earnings growth, also revenue growth. Crown jewels. In this way, whatever be the market conditions, you are able to find low risk buying opportunities. Doesn't mean every trade will make profit, but if you find the strongest fundamental stocks giving low risk buy points while they are in strong industries also, overall, as I say, it is difficult not to make money from the market if you are disciplined to follow this approach. And it could be done in a top-down fashion, it could be done in a bottom-up fashion. I just carried out the bottom-up analysis, or rather maybe fundamental first analysis, where I started with Vital, looked at the scorecard of fundamentally strong stocks. You could do the same thing in top-down using QH. You could first look at the sectors, and let me show it once again. Look at the sectors. Yesterday, energy and consumer discretionary was strongest. We could drill down into their industries, and we could do all of this in real time. We could look at the strongest industries, the ones in bold case. They are, let's choose up to one, let's say 130. We have many industries. Drill down to their industries. I could drill down to the drill down to their stocks. I could drill down to the stocks in these industries from S&P 1500, or I could go to my own trading universe. Let's go to S&P 1500 for now. I already explained how to use fundamental first to use your own trading universe. So these are stocks now in the strongest sectors, in the strongest industries within these sectors. Now I'm going to look for crown jewels, and you see ANF came to the top. So you could find ANF using the top down or bottom up analysis both. You could do the same thing for all the other stocks. Whether you do bottom up, top down or fundamental first, Q technique tells us always to try to align forces from all the dimensions, and those are really high probability trades. We are at the 1 hour point. The market is bullish, but it is also at all-time high for QQQ SPY, there is not enough bearish signals to take short trades. There are cautionary signals, like in case of Pfizer, but the market being so bullish, at least for the market ETFs, it may not be the best time to short. Shorting opportunities will come someday, but may not be the right time now. You may take buying positions, but be cautious not to buy stocks that are at a very high price level, and we could find those stocks in few clicks using these real-time systems as I demonstrated. Let's see what happens this week. There is a Fed meeting, and Friday, or I think Thursday or Friday, there is a, a commentary by Fed chairman. We'll see if that moves the market. Until then, we may have to wait. The market is still continuing to be bullish. I'm sharing more bullish ideas than bearish ideas on my forum, my YouTube session, so you know which direction I am inclined to for short-term trading. At 1 hour point, let me end today's session here. Thanks for joining. I look forward to seeing you in my next session that will be during the weekend as usual. If you are subscribing to the YouTube channel Trading Profitably, you will get notification from there. And I also tend to share the link and the time on Twitter page Sagar Nandi. Thanks once again. Keep safe and trade profitably. No reason not to do that. Thank you.